And now we come to trade of the day, the highlights of this week's trades. Let's get into it. Good evening and welcome to Follow the Money, bringing you the latest updates on everything business, finance, the markets, and investment funds. Our top story this week, we're diving into a monumental shift by one of the world's most renowned investors. In a significant move, Warren Buffett's Berkshire Hathaway has sold over $3 billion worth of Bank of America shares this month. This reduction amounts to 71.2 million shares, decreasing Berkshire's holding in the bank by 6.9%. Despite the sale, Berkshire remains the largest shareholder with 12.4 stake valued at approximately $39.5 billion. The sale follows a remarkable rise in Bank of America's stock price, which has surged nearly two-thirds since late October. Buffett's decision comes after a long-standing support for the bank and its CEO, Brian Moynihan. In 2011, amidst concern over the bank's capital after the 2008 financial crisis, Buffett invested $5 billion in Bank of America's preferred stock. By 2017, he converted this into common stock, ultimately spending $14.6 billion on Bank of America shares. Buffett's latest move is seen as a strategic profit taking following the significant appreciation in the stock's value. However, it's worth noting Buffett's previous statements, highlighting his admiration for Moynihan and his reluctance to sell the stock. Analysts suggest that this sale aligns with Berkshire's strategy to balance its portfolio and take advantage of the market conditions, with the bank stock trading at 1.2 times book value after years of trading below book value. The timing seemed opportune for profit realization. The fund's recent sales highlights the importance of adapting to market dynamics. Whether you're a new investor or a seasoned one, staying informed and flexible is crucial. Also on Follow the Money, in a groundbreaking move, Ares Management Corp has closed its latest direct lending fund at a record $34 billion. This marks the largest fundraise ever in the growing private credit market. Ares Senior Direct Lending Fund 3 has raised about $15 billion in equity commitments, surpassing its $10 billion target. When including leverage and separately managed accounts, the fund's total capital is more than double that sum. Mitch Goldstein, co-head of Ares Credit Group, emphasized the global and diverse nature of their investor base, highlighting the momentum in the $1.7 trillion private equity industry. The creation of such a massive fund underscores the growing appeal of direct loans as a go-to for source of financing for companies, especially as high interest rates and regulatory constraints limit traditional banks' participation in riskier loans. Analysts suggest that Ares' record-breaking fundraise is a strategic move to capitalize on the increase in demand for private credit. With every major alternative asset manager pushing into this hot market, direct lending has become a crucial component for modern financing. Market watchers have noted that while there's been a lack of new deals in the buyout world, Ares expect a pickup in activity later this year, signaling a robust pipeline for lending to new mergers and acquisitions. Ares Management's strategic fundraising is a clear indicator of the evolving landscape of private credit. This move not only sets a new benchmark in the industry, but also highlights the dynamic nature of modern investment strategies. That's all for Follow the Money this week. Thank you for joining us. Join us again next week in the latest updates in the world of money. Back over to the studio for Trade of the Day. Welcome to Trade of the Day, our groundbreaking weekly trading series where we reveal the secrets to achieving consistent weekly returns in the fast-paced world of day trading. Join us every week on this exhilarating journey as we decode the strategies and mindset needed to harness the power of the market and unlock remarkable financial growth. Whether you're a new trader seeking to build your wealth or a seasoned investor aiming to amplify your gains, our series is your roadmap to success. Get ready to revolutionize your trading approach and embark on a path towards achieving your financial dreams one week at a time. Also, we'd love to know where in the world you're tuning in from, so post in the comments below. A reminder that this is not financial advice and that trading comes with real risk. My name is Alice, and I help traders and investors who struggle with confidence to make money in the financial markets find consistency and skill to achieve financial freedom, time freedom, and location freedom. I believe trading is the greatest wealth building tool of all time, and everyone on this planet needs access to this skill. I'm on a mission to impact 1 million people through trading by 2030. Let's go. Coming up this week, this is how you could have made 5% in the market taking one trade a week, using one model, risking no more than 2% of your equity, looking to make a 1 to 3. So you're risking 2% to make 6%. We had a total of 2 trades this week for a potential return of 12%. It's important to note that everything that we share here is how we trade at I'm the Trader. But before we dive deep into this week's trade of the day, let's talk about having a trading edge and what that entails. A trading edge is one of the 3 pillars every trader must have in their trading to survive and thrive in the financial markets. If you don't have these 3 pillars in your trading, you're setting yourself up to fail. Confidence in your trading edge comes from 3 things. 1. Understanding the market and how it operates. 2. Having one trading model that has IPTA signatures. 3. Having a plan and process that you follow every single day. Successful trading is boring. You're doing the same thing over and over again. This is the 3-step process I use to take trades weekly. Step 1, condition. This is based on a higher time frame directional bias. Step 2, stage. What sets up your trade? What does it look like? Step 3, execution. Can you execute? Have your entry criteria been met to get in that trade? The most important step is step 2, the stage, because once you understand where the market is going and you understand the setup, the entry is easy. Also, guys, if you understand price flows that occur around key highs and lows intraday, you'll have everything you need for setup. Step 1, determine the high time frame directional bias. Where is the weekly candle likely to go? What is it reaching for? This will give you your condition going into the week. There are several factors that go into determine the high time frame directional bias. However, there are only 2 options. It's either you expect the weekly candle to expand higher or you're expecting the weekly candle to expand lower. Step 2, stage. What sets up your trade? What does it look like? First, we look at the economic calendar for the week. It lets us know when to look for a setup. We stock setup on calendar day and after the news release. The optimal days to trade this week were Tuesday, Wednesday, Thursday, and Friday. Bearing in mind this week was NFP, so you could have traded on Monday. It's the only time of the week where you can trade on Monday without economic news. Also on NFP week, we're looking to be done trading on this account by Wednesday AM session, which is 9:30 to 11:30. Secondly, we look at what sets up your trade and what does it look like. This will be your model. If your weekly analysis suggests that price is going higher, then you're in a buy program and should be hunting long formations. For our buy model, we want to see price trade below a key low, displacement higher causing a market structure shift. The displacement leg must have a fair value gap busy near the swing low. We wait for a swing high to form to anticipate execution. If your weekly analysis suggests that price is going lower, then you're in a sell program and should be hunting a short formation. For our sell model, we want to see price trade above a key high, displacement lower causing a market structure shift. The displacement leg must have a fair value gap CB near the swing high. We wait for a swing low to form to anticipate execution. Step 3, execution. Once the stage is set, when and how do you execute? For execution, we're looking to enter on the fair value gap or order block created in the displacement leg that caused market structure shift. You have 2 options here. You can either enter a limit order at the order block or a limit order at the fair value gap. We use the fair value gap near the equilibrium of the range. You can also use the low hanging fruit option, meaning the one closest to price. Your stop loss will go at the swing high for a sell and at the swing low for a buy, and you're always going to be targeting a 1 to 3. It's important to know that you can have both models form in a span of a day or a week, but your high probability trades will be in the direction of your weekly program. Here are some factors to consider for high probability setup. First, we have time, the most important aspect of trading. At what time is the setup occurring? Then we have range. Where are we within the range? Are we in the upper, mid, or lower quadrant with respect to buy or sell? Liquidity. Is there or does price create liquidity right in front of the fair value gap or order block? With regards to this liquidity, once price takes the liquidity and enters the fair value gap or order block, you should see an immediate reaction. Lastly, when can you no longer enter the trade? Where is your cutoff point? For me, once price leaves a 0.25 fib extension, I'm no longer interested in entering the trade. Trading is a solo sport. You have to make it unique to you and your personality. What may work for me may not work for you. All of this sounds complicated, I'm sure, if you're hearing it for the first time, but it's really simple. You just need to show up on the charts and look for it. Now let's head over to the charts and look for it in price this week. Welcome to Tracking IPTA. This week was a breakthrough in my trading journey as I realized the importance of analyzing multiple time frames for entry. Previously, I was too zoomed in on the M1 time frame and missing the bigger picture. Through continued learning, I discovered how different time frames come together to tell the complete story of price action. By incorporating the M5 and M15 timeframes into my analysis, I was able to identify entries that I would have missed on the M1 timeframe. This broader perspective has significantly enhanced my trading strategy and taken my performance to another level. Understanding the interplay of multiple timeframes has also helped me reduce my fear of losing. I now have a clearer view of the market, which boosts my confidence and decision making. I finished the week with a 12.2% increase in equity. In dollar signs, we're talking $3,065. And overall, we're up on the account by 46.3%, which is $11,570. Let's get to hunting, guys. Grab your tools. As always, we'll be looking at the charts in bar replay mode. This means that you won't be able to see my executions. However, you will be able to see my horizontal lines, which represent the time aspect of trading, the most important tool you need to track IPTA's movement: time. Now remember, even though I'm going to show you both buy and sell models, it's important to know that your high probability trades will be in the direction of your weekly program. You can take counter trend trades with this model. For example, you can take sell setups even if your higher time frame direction is bullish, and vice versa. It's just your probability of winning reduces significantly when you go against a higher time frame directional bias. If you're new to trading, I do suggest only taking trades in the direction of your weekly program. We're going into this hunt with the understanding that you guys have already arrived at your high time frame conditional bias. This is a hunt purely for setups. To the hunt, let's go. Monday, July 29, trade of the day breakdown. We had the AM session for sell formation with the entry on the M5. We had no news on this day, but our NFP protocol states that we can take a trade. This is the only week we trade on Mondays without any needing to have any news. All right, let's get into this trade. 9:30 to 10 o'clock is the opening range. We're not trading, we're looking to see what price is doing. And as you can see, we trade above a key high, we trade above London session high. We take liquidity above the London session high and also trade into an old high. Displacement lower, causing a market structure shift below the key high. The displacement leg has a fair value gap SIBI near the swing high. We wait for a swing low to form to anticipate execution. For execution, we're looking to enter on the fair value gap created in the displacement leg near the equilibrium of the range. You would have a swing low right here. This candle closure would have confirmed this swing low, and then you'll be anticipating an execution, okay? So you would have been tagged right here when price comes back into the SIBI. So you would have been tagged at 10:45, breaking even at 11:10, taking out the trade at 11:15 for a total time of 30 minutes in this trade. Drawdown in this trade was 3 ticks for a 6% bagged and tagged. Let's consider factors that made this trade a high probability setup. First, we had the time aspect, is the AM session, yes, and it's post 10 o'clock. Range, we're in the middle to upper quadrant. We're in the premium for a sell. Yes, liquidity. We have a short-term high right here. The price comes and takes. And once it takes it, you see immediate reaction to the downside. 3 out of 3 matching up to make this a high probability setup that netted you 6% for the day. I actually did enter this trade. This was the only trade I took on this account this week. As you can see, July 29, this was the trade I took. And I'm still struggling with my exits. I did close this trade prematurely before it hit TP. My TP was supposed to be below this weekly discount array. It was supposed to be right here, but once price got to here, I got antsy and I closed the trade prematurely. But as you can see, my TP would have been hit. I'm still struggling with my exits week after week. I'm telling you, I'm struggling with my exits, and it's a real thing, man. It's a real thing. I'm working on it, but that's one thing that I need to get better at as a trader on my exits, because I get impatient once I see a little bit of retracement, start to take my money away from me. I'm like, what are you doing, bruh? Give me my money. But I need to trust the model and trust the process, all right? It's not good to be closing trade prematurely. Even though it's in profit, I'm still not sticking to the model if I'm closing all my trades early, all right? Oh yeah, that was the trade for Monday, NFP Monday. Tuesday, July 30, trade of the day breakdown. We had the AM session, sell formation. Let's get into it. As always, we start with the economic calendar, and as you can see, we had high and immediate impact news come out at 9 and 10 o'clock. 9:30 to 10 o'clock is the opening range. We're not trading, we're looking to see what price is doing. As you can see, we had price trade above a key high. We take liquidity above a key high. Displacement lower, causing a market structure shift below the key high. The displacement leg has a fair value gap SIBI near the swing high. We wait for a swing low to form to anticipate execution. For execution, we're looking to enter on the fair value gap created in the displacement leg near the equilibrium of the range. Here is how the time frames come together and create the bigger picture. So we had the short-term low form right here. We're anticipating execution and we're looking to enter on the fair value gap. As you can see, the M1 time frame doesn't have any SIBI, in other words, fair value gap near the 50%. We have one up here and up here, but near the 50%, there is, as you can see, there is no fair value gap. But we did have an M15 fair value gap that formed right in this in the 50% region. Okay, so you would have been tagged here when price comes up and takes this liquidity right here. You would have been tagged in this trade at 10:17, breaking even at 11:01, taking out that trade at 11:04, a total time of 47 minutes in this trade. Drawdown in this trade was 7 ticks or 6% bagged and tagged. Let's consider factors that made this trade a high probability to set up. First, we had the time aspect, is the AM session, and it's post 10 o'clock, check. Post 10:10 as well, check. Range, we're in the middle to upper quadrant, we're in the premium for a sell, check. Liquidity, we have a short-term high right here. The price comes and takes into the M15 SIBI, and as you can see, once it takes that liquidity, you see immediate reaction to the downside, and you know you're on side. So 3 out of 3 matching up to make this a high probability to set up, that edge you 6%. I was looking to enter this trade. I had my limit order up here, but as you can see, it doesn't get tagged because I'm looking at on the M1 time frame for this for the SIBI. It doesn't get tagged. But I realized on the M15 it had created this SIBI in here, so I waited to see what price would do inside of the SIBI. And as you can see, we come into the M15 SIBI, take that liquidity, displace lower, take this structure, leaves another SIBI on the M1 time frame, and I go in here at the I go in the SIBI and rolled it down for 1 to 3. Didn't get in on this account. I got in on my testing account. Show you guys that I actually do take these trades. This is an account where I try out different methods and strategies. So that was this day, July 30th, right here. I took that trade right here. So I saw that it didn't come up high enough to where I was anticipating on the M1 time frame. But we had the M15 SIBI that it comes into, takes M1 liquidity, displaces lower, gives you another opportunity. I've noticed this a lot actually. Gives you another opportunity to actually get back in right here on the SIBI, and I rolled it down for 1 to 3. And that was it for this week. After Monday and Tuesday, we didn't really get any other clean setup with the model. Obviously, I was out of the market. I was done on Tuesday anyway, because NFP protocol states that we're looking to be done Wednesday AM session. I got 2 trades, Monday and Tuesday. I don't really need to be in Wednesday's session either. Okay, and I was done trading for the week. And yeah, that was Tuesday, July 30th. That brings us to the end of tracking IPTA this week. I hope you guys enjoyed it. A little quick update on my funded account. I didn't take any trades this week in my 50K funded account. Top Step, mainly for 2 reasons. A series of losing trades from the previous week really knocked my confidence. I ended up actually losing the 2 100K combines that I was going after. Secondly, I had already took a payout for the month and didn't want to risk losing the account. Okay, so I already took money out, so I didn't need to keep trading on that account. So I took a break to recalibrate. I'll be back trading my 50K account next week, and I'll be starting a new 200K combines next week. All right, we're still on the road to 150K asset under management. We just hit a couple of speed bumps, but that's all part of the game. Okay, I'm not giving up. I know I'm gonna make it happen this month. All right, if not this month, definitely next month, but it's gonna happen anyway. Thank you guys for tuning in. See you all next week. Every week, we have shown you at least 1 or more opportunities that could have netted you 5%. With a 2% risk, if you had taken all 2 trades this week, you'd be looking at 12% for the week. But remember, we're only looking for 1 trade that will net us our 5%, and we're done trading. As traders, we must be content with enough, and we must learn to limit trade frequency. The less you're in the market, the less of your money it will take. I hope you found Trade of the Day insightful and hopefully you enjoyed this one. Deciding to become a trader is the greatest decision one will ever make. It is the fastest way to build the life that you want. And too many of us fail at it, 90%. This is because we're not equipped with the right tools to ensure survival, let alone thrive. There's a way to succeed at trading. Trade of the Day is about showing you how we at I'm the Trader are doing it and how you can do it too. Always remember, this skill is not easy to master, but it's also not impossible. You only fail when you quit. Thank you for watching. See you all next Saturday, same time, same place. Happy hunting.